Everyone in crypto is used to selling in May and going away. This video isn't about that meme. You see, there is a ton happening under the hood, with Bitcoin recently ripping unapologetically from the low 70s all the way up to the high 90,000s. Now the question is it time to jump back in with 2 feet, or is the other shoe about to drop? With leading quants that predicted this drop saying the bull market hasn't even begun yet, CZ predicting up to $1 million this cycle, retail traders buying the dip while institutions hide, Jim Cramer predicting no recession, private credit being sold at 50 cents on the dollar, the head of the Port of Los Angeles claiming that we're about to see the biggest shortages that we've seen in years, and the S&P 500 trading like a shitcoin, all while Warren Buffett says that it's good to own other currencies besides the US dollar. We have ourselves a recipe for what seems like a lot of dark clouds in the sky. And so the question is, are we climbing the wall of worry? Or is there another episode in this series of the Trump administration rattling the markets before a sustainable uptrend can be formed? Now, if you appreciate the work and energy that goes into preparing these long form videos, please smash that like button. It's a free and easy way to show that you like the content. It helps get these videos out to far more viewers. And most of all, I appreciate it. Today, we're going to be going over how I plan to inject my biggest buys into this market, because I personally think the worst is over for crypto. But that doesn't mean that right now and right here are the best ways to re-enter into the market. As you know, I've been expecting another move down to push a lot of my cash back into the markets, as structurally, I'm very bullish on Bitcoin and crypto over the coming few years, and I do not want to be sidelined. However, the strategy on how I plan to get that money into the markets is going to change everything. So make sure you watch to the end of the video where I explain everything that I'm going to do on a strategic level. But the meat and potatoes of this video are really important for understanding why I'm positioning in the way that I am. So without further ado, let's dive into this. First and foremost, we have Bitquant, who in December predicted 76K to be the ultimate bottom for Bitcoin. And he really wasn't too far off, as it pretty much wicked down to 74K, but 76 was a pretty darn good estimation. And this was while Bitcoin was trading at around $100,000. He said, sell in May, regret the play, which is a flip of the sell in May and walk away. That is the traditional logic. And that's what we've been following for the last few years here in crypto. The last few years have had horrifically boring summers. He also said one day the bull market will begin, and he shows this chart, which effectively shows that when you get over this logarithmic regression trend line, this red line, that's the real bull market. Now, we haven't done that yet. Once you see this will be obvious. You won't need me to show you because it'll be obvious on this chart. Now, I haven't seen this exact regression. It's a 3-day regression. Again, it's sometimes easy to fit the regressions looking backwards more so than it is to do them forwards. So again, this is interesting. So Bitquant, who called the top pretty perfectly and the bottom pretty perfectly, is expecting us to zoom to 140K at some point. He doesn't say exactly when. The question is it up only, or do we have yet another trip down before we eventually make our way up? Now, I think this is really important because Binance founder CZ did an interview where he believes that the top for this Bitcoin bull market is 500K to $1 million. I want to be very clear. He did not call this a top of the 4-year cycle. He called this a top of the cycle and made sure to explain that he's not sure what the cycles even are anymore. And I think that is going to be absolutely critical to our own analysis.
Bitcoin tops at this cycle.
Again, very difficult question. Somewhere between 500K to $1 million, I think.
Wow.
Yeah.
Now, what I'm about to go through here and show you is, one, the fact that crypto way outpaced traditional markets in leading this move down. Crypto was several weeks ahead of traditional markets in actually collapsing down in response to all of the uncertainty of Trump's presidency. It's easy to see when you line up the total crypto market cap, meaning all of the value in crypto, and of course, traditional markets like the S&P 500. And I'm going to show you that there is a lot of dark clouds still swirling around the S&P and traditional markets, all related to trade wars, tariffs, and other kinds of economic slowdowns. Now, I personally also believe, spoiler, that these are not going to cause the doomsday-like recession that everybody is saying is possible. I don't believe that is in the cards. Personally, I think it's a very small % chance, though of course, nothing is impossible. I do believe, however, that they will require another trip down to the lows, another scary trip down to the lows, to be very clear. But crypto will be one step ahead of equities in putting in those lows. Check this out. If you look at the total crypto market cap, you can see that from the original top here that we put in about middle of December, we actually already came down upwards of 25% on the total crypto market cap, a loss of nearly $1 trillion already by mid-February, where if we look that exact week, the S&P was literally at its highs. I'll expand to a full view here so you can see that on Tuesday, the 18th of February, the S&P was literally at all-time highs. But if you go to the total crypto market cap, at that point, crypto had already broken down below this range that was set in at about 3 trillion and had put in a low, almost $1 trillion below the prior all-time high. That is a massive, massive move down that shows that crypto was way ahead in the weakness in breaking range and eventually just completely plowed down to all kinds of lows by the time that S&P actually broke and everything actually broke. So crypto put its all-time high in at around mid-December. Mainstream markets put their all-time high in about mid-February. That's actually a massive gap. That's about a 2-month gap that crypto had in leading the liquidity change, the change of behavior that we saw that took place. Now, of course, 2 months, I'm not trying to say this is a hard and fast rule. I'm just saying there was quite a bit of time that crypto put in its highs before mainstream markets put in its highs. And while I believe that Q2 represents the bottom of this local man-made Trump-induced recessionary fears, trade war-based pullback, I do believe that crypto is still ahead of traditional markets. And that would mean that if I'm correct and we're in the process of recovering, that mainstream markets, if they go down and have another trip down, that they would be putting in either its ultimate low or at least sweeping the lows, and that crypto would be putting in a lower high. And again, if you look at the total market cap of crypto, you can see that it is still well below, even though Bitcoin is performing a lot better than this, you can see that it's just well below this particular weekly range that it never ever got back above. So even though we've had this ripper, the total market cap is still looking abysmal. And you can see on Bitcoin, this candle right here is where we went all the way down, and we still have yet to really get above that. We had a little bit of a fake out here, but we haven't sustainably gotten above this level, even though we're above, this level, which was the weekly prior low or the higher low before that. We are still not above the actual breakdown level, which again, it just gives kind of a bull trap feel, like it's a bit of a mirage. Again, a V-shaped recovery given everything going on, no real help from the Federal Reserve, no big stimulus coming from the Trump administration, still a ton of confusion around trade deals and how these are all going to shake out. That is precisely why I think we have not made it totally out of the woods yet. But I do think that that clarity is coming, and I believe that it's coming in Q2. That's my general belief. And we know this because the time clock has been put on this by the Trump administration. They're the ones who said 90-day pause, literally the beginning of Q2. They said we're going to pause for a quarter. And now they have the 90 days to present some progress. And they know that things will get very nasty if they don't. Now, one of the things that I think you should be aware of, and I don't think this is a very good sign, I think that what's remarkable here is that institutional investors dumped at the lows and stayed out. They sold low and now they're scared, and retail kept buying the entire time. So this last move upwards has been on very low liquidity driven by retailers. When have we ever seen traditional markets just run away without the institutions? Oh yeah, they're just gonna let us have this round, move on and take an L. I just don't see it happening. Maybe in crypto that can happen, but not in the traditional markets. And that means that if they really believe there's a recovery happening and that there's an opportunity here in the charts, they would be buying. And if that opportunity starts to run away, I believe they'll pull that train right back so they can get back in at a better price. All in all, what I'm trying to say is maybe this is the first time in history that retail will run away with the bag and leave those institutions on the sideline, just FOMOing. I don't believe it. I don't believe it just yet. We'll believe it when we see it. Again, anything's possible, but I would consider that a very low likelihood. If you want scientific proof that the fears of recession are actually not over with, then look no further than Jim Cramer, who said there will be no recession this year. And we obviously know that this is the most reliable indicator because Jim Cramer has never been right about anything ever in his life. Of course I kid, but honestly, it feels a bit insane sometimes how much Jim Cramer just publicly spews things that are wrong. Another warning sign, we see that private credit markets are offloading at 50 cents on the dollar. Essentially, this is a major panic signal that private credit is worried that that credit might not be coming back. It might not get repaid. So they're willing to take a 50% haircut just to get something back. I don't know how significant this is to the overall economy, but it's not a good sign. This is not a good sign. Private credit is effectively when companies take loans on a private market where you say, okay, you can lend your money to the government and get, 4 or 5%. But if you want to get a higher yield, you can get, 8, 9, 10, 12, sometimes even 20% if you loan to private companies, depending on the risk that comes with, depending on how reliable, how reputable of a company that you're lending to. And so private credit, effectively not credit coming from the government, that's what we're talking about. And people are offloading at 50 cents on a dollar. It sort of feels like something bad might be coming, or at least they're worried about something bad coming. And why panic about it this week? Well, the head of the Port of Los Angeles has something to say about this. And he's effectively saying that they're seeing a full-blown pause on importing. That all of the importing that we saw over the last few months, that spike, that was effectively preparing for tariffs. And now everyone is in a wait-and-see mode. So if we're going to see shortages in supplies and goods, or if we're going to see empty shelves, if we're going to see a total change in consumer behavior, a change in prices, a change in everything, all of that is about to hit over the next coming days and weeks. So we haven't really seen the impact of tariffs yet, but apparently we're about to. And according to the head of the Port of Los Angeles, it's becoming a literal ghost town over at the port, meaning practically very little ships are coming in and they're having to cut back on manpower and hours because it's simply not needed. Again, we have these two other pieces of data. We have the NASDAQ in extreme overbought territory, and this whole move in the S&P 500 was apparently 90 basis points and driven by just 19,000 contracts, which you don't need to know a lot, but just know that is very, very small amount of economic activity. Effectively, people aren't really trading much. There's not a lot of liquidity in the system, so the book is moving around like crazy, and the low liquidity has allowed for this massive ripper, which means you're essentially ripping up on low liquidity. It's just not a very strong sign. It's not a sign that there's a bunch of healthy flows here. This is what this means. So we can see here that equities, the stock market, are not out of the woods yet. Certainly all of this tariff nonsense hasn't just been chewed through and processed. There is yet another foot that needs to drop here. Now, will this take us down significantly? I don't know. My guess is that there would be a pretty meaningful down move. Will this be to new lows? My gut says yes in equities, but no in crypto. And that's because crypto is one step ahead of equities, a significant step, a multi-month step ahead. But overall, I also don't believe that the problems in the US economy are all that bad. This is pretty much a Trump-induced recession pullback, as we were discussing over the last several videos. It hasn't been created by things actually breaking in the economy. In fact, one of the best macro analysts in the space right now, Fijao, is saying the treasury market liquidity and monetary plumbing is fine and there's no stress. And he's, doing the guy standing up meme because he feels like not enough people are saying this. Again, I don't believe the system is breaking. The economy isn't breaking. We have this short-term pain induced by tariffs that there's a lot of evidence will be resolved or have a forward-looking resolution by the end of this 90 days. And in fact, Treasury Secretary Scott Bessent is coming out and saying, look, we're up and to the right. That's how this economy works, and that it's a great time to invest in America. So come and invest. But some analysts like Mr. Warren Muppet here have said this is the most bearish thing he's ever heard. And I will admit, it is giving a steady lads deploying more capital type of vibe. I'm not going to explain that one. If you know, you know. So as Warren Buffett is saying, it might be a good idea to own a lot of other currencies besides the dollar. The question is, what is the best currency to own? What is the best currency? And how should we go about buying it with our dollars? Because just yesterday, we saw an explosion in value of the Taiwanese dollar, which is crazy against the US dollar. I mean, the US dollar just plummeted against the Taiwanese dollar. So as Trump takes yet another interview about China, where he argues we're saving hundreds of billions of dollars by simply not doing business with China, we should all be wondering to ourselves, how do we buy Bitcoin? How much can we buy? And exactly when? Now, of course, I don't have a crystal ball, but here's what I think is going to happen next. I believe we are in the midst of what translates to a Bitcoin super cycle of sorts. And that's because I do believe that the 4-year cycles are not really driving this anymore, where you saw Bitcoin kind of just go down for years and then just explode after the halving. I think what we're seeing here is the steady adoption of Bitcoin bit by bit, piece by piece, and that you'll see essentially long ranges resolve to the upside eventually with big pullbacks. But essentially, you're going to see Bitcoin kind of chug its way up slow and steady over several years. We've pretty much seen this play out over the last, what is this? Starting from, March of 2023, we saw this big explosion upwards in Bitcoin. You could argue it started back here in January of 2023. So over 2 years now, two years and change. But you have this huge multi-month range here, 217 days, and then we exploded up. And we had another multi-month range for, 245 days. And now we are simply in another multi-month range, which if we have a similar amount of time here would lead us to, Q3, the beginning of Q3, before we start exploding out of it. What I'm saying here is that this isn't about predicting short-term exactly when Bitcoin breaks the range. It's about saying, hey, look, chances are we'll remain in this range for a while and then we'll eventually break through and we'll make our way to the next level of the Bitcoin adoption game. But I don't see this being a situation where Bitcoin goes into these prolonged multi-year bear markets. Not anymore. Not with the institutional adoption flow. And not with the final explosion of the corporate treasury use case. You see, what started as just one Michael Saylor and a dream has really exploded. He's saying he's going to raise $84 billion to purchase more Bitcoin, which I think a lot of people are saying, whoa, slow down, slow your roll. we don't need you to have all the Bitcoin. That actually is a little scary if one entity controls maybe over 10% of Bitcoin. They essentially now are in control of Bitcoin, and the whole decentralization idea isn't really valid. But I had ChatGPT put together a spreadsheet of all the companies that have either bought Bitcoin, hold Bitcoin, or plan to buy Bitcoin with their corporate treasury. And this is the explosive and exciting part. We have Tesla, MicroStrategy, Block, GameStop, Marathon Digital, Riot Platforms, Galaxy Digital, CleanSpark, Hut 8, Bitfarms, and Cooler. I don't think they have MetaPlanet on here out of Japan. But we've seen that companies as big as Nvidia now are considering adopting a Bitcoin treasury strategy because it brings a sense of calm, of safety, of stability, which is something that you don't normally associate with Bitcoin. But when people see, hey, look, Bitcoin might be the big winner out of all of this, and our companies might get absolutely destroyed based on tariffs, import costs, and all of these now wildly changing global trade dynamics, well, Bitcoin is simply unaffected. In fact, it does what it does even better, as it's literally designed to exist outside of this system. That permissionless and decentralized network effect is finally getting its time in the light. So if this becomes a thing where all publicly traded companies start saving in Bitcoin, that is insane. And it turns all of public markets, the trillions and trillions of dollars, the quadrillions of dollars within public markets, it turns that into effectively a funnel into Bitcoin, which is a relatively very small asset. So I believe as things get rocky and weird in equities land, it's leading to huge entities to look at Bitcoin as a potential hedge. And that is really the beginning of this new narrative. Again, we've known about the Michael Saylor strategy, but we've not seen the contagion of what this is going to do when a ton more publicly traded companies start to use this Bitcoin saving strategy as a way to bring even more excitement to buyers for their stock. And we know that if it does work and people start seeing that as exciting, say Nvidia starts saving a meaningful chunk of their balance sheet in Bitcoin, and people start pricing Nvidia even higher, anticipating future gains for their Bitcoin holdings, that can be an insane cycle where we don't just have one MicroStrategy, but we have dozens. And this is not factoring at all the potential for a Bitcoin strategic reserve, for the United States buying, for states buying, or other countries, smaller countries buying. These are all on the table as well. Now, before I get into exactly how I'm going to play this, because let's go into the charts now and let's talk about exactly how I plan to trade this and where my expectations are. I want to take a second to shout out the sponsor of this channel, NordVPN. Now, as you guys know, if you follow this channel, NordVPN is the main sponsor of this channel, and it's a product I use and love every single day. I was the unfortunate victim of a SIM swap attack, and they used information that I exposed, unfortunately, voluntarily, that could have totally been hidden if I had been using NordVPN to browse everywhere and everything online, which is now my absolute default and something that I cannot live without. Obviously, we know about the benefits of VPNs, like watching content in other countries, but to me, protecting your identity online as a crypto user is one of the most important things you can do, period. And it only costs a few dollars to get signed up. There's a special big fat discount if you use the link in the description below. And most of all, it supports the channel and I appreciate it. So thank you so much for using NordVPN. I highly, highly recommend them. As I've said many times, there are many mistakes that you can be forgiven for in crypto. There's a lot of confusion. Not using a VPN is far too simple and it's not something you'll be forgiven for. So make sure you use a VPN. So let's talk about price action. First of all, I believe what Doc is saying here is really important. Life is better when you accept our Lord and Savior 9-month range into your heart. This is pretty much what I was showing here, is you have these 9-month ranges that we've experienced in 2023, in 2024, and now in 2025, we have a clear range. And so the question is, how long until we break it? And if history is a guide, expecting it not really to break for a while or until it does is the way to do it. And in general, you want to be controlling your risk and selling stuff up at the high end of the range and buying stuff at the low end of the range. You don't have to be a full-blown trader to do this. But again, we did this as we were starting to break down. We sold stuff up in here, and then we wanted to buy stuff down in here. And we bought some stuff, but we want to buy more. Now, I personally believe that we will start to see things get really, really spicy, especially as we get towards the end of the year. Bitcoin will be starting to break its way up in response to global liquidity, which is just up and to the right. And we will also see, hopefully, this entire tariff, trade war, massive intervention into the economy and markets that will most likely have been chewed through and digested. But again, I could be wrong here, but my gut just genuinely feels like this is not a convincing enough move up, that this just feels like another bearish move up, and we're sort of about to go down and start exploring first this middle of the range, but eventually maybe even the lower end of the range. So of course, I want to plan my trading around what happens if we get back to the high 80s. Obviously, if we switch to the daily chart, there's quite a bit of demand here above 90K. We can see these big wicks and these candle bodies closing here. I think that we'll probably see some really nice bounces around 90K, and maybe between 90 and 92K will be the bottom of this move, and that, we could hit here and just go all the way up. I think that would be potentially optimistic. I think that would be the most optimistic move. But I do think that if tariffs and all this confusion around trade do hit hard and the mainstream markets do correct like I expect, I wouldn't be surprised to see Bitcoin definitely retest this original range breakout here at 85. So I plan to buy some here just in case it does one of these and we go all the way up from there. That's just it. That would be great. But really, it can come all the way down even to this, 76K level and retest that. And remember, this was the prior low. So it wouldn't even be making a new low. And that could be its higher low. And eventually then we work our way up throughout the rest of the summer, etc. My point is, I want to be a buyer here, and I want to start sizing in my buys first a little bit at 90. I want to have some fuel here in case we come back down to the 88 range here. This was this original tariff, Liberation Day breakout. And I still want to have cash in case we get down to these ranges. I don't believe we will break below these ranges, right? I don't believe that we'll break below the prior all-time high of 74. That's not my current case. I'm not looking at that unless something crazy shit hits the fan in mainstream markets and really stuff's falling like a rock. I just don't feel like that's the situation we're in. I feel like what's going to happen is people are going to get so emotional on the next move down in the stock market, and institutions, remember, they're not in this move up. So they're hoping this goes down, and we all know institutions don't play fair. So there's a lot of reasons I believe that there would be another move lower in the stock market before we actually see a sustainable recovery. But I believe that if we do make new lows in the stock market, that would come with a ton of bad news. And that would probably represent peak fear, peak uncertainty, and probably the ultimate low for equities. Again, this is just my gut. This could be totally wrong. We could throw this all out, but that's how I'm playing this, is I'm expecting for there to be new lows in the stock market and not new lows in crypto. And if we get that combination that I'm expecting, I believe that any of those buys over this next dip are going to age extremely, extremely well. There's something coming up that I think a lot of people aren't really focused on, but will become a huge narrative as we get towards the end of this year. And I'm going to put it on your radar right now. Now, we heard, of course, that Jerome Powell is not going to be replaced by Trump. He knows that that would spook the markets. It would cause way too much uncertainty and fear, and he doesn't want to do that. But the reality is that he doesn't need to. He said today he gets to replace that person in a very short period of time, right? He was doing an interview. Here's the source on MSNBC. Here's the clip.
Do you rule out removing Fed Chair Jerome Powell?
I'm not, I get to change him very quickly anyway. It's in a very short period of time.
In 2026.
So Trump doesn't need to replace Jerome Powell. He doesn't need to go all crazy mode because he gets to replace him in May of next year. That's right. For those who want specifics, May 15th, 2026. That's when Jerome Powell's term ends. And we will, I'm sure, already be looking forward to what Trump or who Trump is going to replace Jerome Powell with. We already know that that person is going to probably agree ahead of time to be cutting rates. So if rates aren't already low enough, we can assume that that person is going to come in with a steamroller and lower rates. And that excitement around lower rates or potential for QE, essential support from the Fed, is going to probably start informing the market as we get into Q4 or Q1 of next year. People are going to start looking forward. Say, okay, well, in Q2 of 2026, we get a new Fed chair. And that Fed chair is going to be politically accommodating to Trump, because guess what? Everybody's politically accommodating to Trump. So to me, I see a lot of reasons why the peak uncertainty, the peak of the negative emotion around what's going on with tariffs, equity, trade war is all going to start coalescing here within Q2. Within Q2, we want to see this completed. And wouldn't you know that the 90-day pause for tariffs ends? You know what it ends? July 2nd. 2 days before July 4th, the biggest, arguably the biggest American holiday that there is. So if you thought Liberation Day was big, I believe that there's going to be a huge unveiling on July 4th of something, some kind of proof or some kind of symbol that Trump and his administration can say, look, we did it, we won, the war is over, onward and upwards to this new era of American prosperity. And mind you, a ton of goods and services and specific carve-outs from tariffs have already been issued. So we know that no showstoppers are probably going to be really ruining the American economy. So my thesis is simple. We're going to see peak ugliness when it comes to this trade war in Q2. My thesis is also that crypto front ran this, not just by a few days, but by several weeks to multiple months. And that if equities have not yet bottomed, which I suspect that they might not have bottomed, that this next drop will be the bottom, and that people will be screaming for zero, for depression, for all of these crazy outcomes that probably won't occur. And that will be the peak buying opportunity where I will be injecting my biggest buys into cryptocurrency that I've made in years. Now, I'm going to be going over my buying plan as this happens, step by step. So make sure you subscribe to the channel with that bell notification on, because these are going to be extremely time-sensitive videos that I'm putting a lot of thought, love, and care into, because I want to get this absolutely right. Again, no one's perfect. I'm certainly not, but I'm going to do my best to absolutely crush this extremely confusing time in the markets with all of you. If you guys like this video, make sure to click on this one popping up right now, because I know you'll absolutely love it. I'll see you very soon on the next episode.